Well, the attack on Israel has driven up global oil prices on the back of fears that the assault could escalate into a regional conflict affecting oil-producing countries. That, of course, is reviving fears of another period of high prices that could fuel inflation around the world. Last week, oil was around $85 a barrel. That was down from the $97 seen in September after Saudi Arabia and Russia reduced global supplies. The surprise attack has pushed up the price of Brent crude to $88. Well, Marie Sinner from DW Business can talk us through this. Welcome, Marie. So explain more then about the connection between this four-day war and global oil prices.
Right, so the war has not actually impacted oil production or oil transportation. That's because Israel is not an oil-producing country. But the reason that oil prices have spiked regardless is because of concerns that this will spread across the region. So right now, a lot of dust being tossed up in the air, and analysts believe that the dust will likely settle. But if the conflict spreads into the region and oil producers are implicated, we could see a higher oil price in the future.
So talk us through that scenario then, if these other energy actors get involved.
Right. So analysts have their sights set especially on two countries, Iran and Saudi Arabia. Let me start with Iran. So Iran has been accused by Israeli officials of being implicated in this attack. And if the West actually links Iran to these terrorist attacks by Hamas, then punitive sanctions would follow on oil exports by Iran. Iran is an important oil exporter, and that would inevitably lead to higher oil prices. Saudi Arabia is also in focus because Saudi Arabia has actually been in relationship normalization talks with Israel. Those talks were backed by the US. And within the frame of these talks, Saudi Arabia has pledged to put more oil onto the market. Now, if those talks break down because of heightened tensions in the regions, those oil barrels are not entering the market, and therefore oil prices will remain high, and we will notice that because inflation will likely go up.
OK. Meanwhile, Israel's currency, the shekel, that's lost a lot of value in the last few days. Just what's behind that?
Exactly. So on Monday, it was the worst performing currency. It was down 3% against the dollar. And it's actually currently at an 8-year low. And that's because investors are worried about this conflict. Netanyahu has said that this war will be lengthy and difficult, and that's causing uncertainty and impacting the currency. Now, the Israeli central bank has already said that it's ready to sell up to $30 billion of foreign reserve currency in order to prop up the currency, the shekel. And that's actually never happened before. It's a historic move. So big moves being made there in order to stabilize the currency. It should be said, though, that the shekel has actually had a weak year overall already. So this is not an outlier in terms of this new development. The shekel already lost a lot of value earlier this year when the government announced plans to strengthen the powers of the government in relation to the country's top court.
So in so many areas, then, Israel moving into unprecedented areas. If the central bank does step in, this thing isn't going to go away quickly. So is central bank action likely to be successful?
We'll have to wait and see. As we saw, this is unprecedented, but the Israeli central bank has a lot of foreign reserve currency, so a lot of power can be wielded by the central bank. So not a reason to worry too much at the moment.
OK, thanks for that. The DW Business reporter, Maria Sinner.